Hey everyone. Okay, everyone's a little early today. Hi. Hi Ellen. Hi Christian. Hi Hassan. I forgot to change my name. I decided to join a little bit early today so that I can get all the technical stuff ready, right? But need to figure out how to change my name. Rename. Okay, there you go. Cassandra. Hi. Hi Hassan. Hi Ivor. Hi Jamel. Hi Kurt. Hi Juha, Muti, Ondrej. Okay, I think I was saying yesterday that Desmond was supposed to take you guys, but he couldn't make it today because he has COVID. He is COVID positive. So yes, okay. Let me just get all the technical stuff ready, like the slides. Okay, there you go. Oh my goodness. Okay. What in the world? Hold on, guys. Okay, whenever I share screen with you guys, my entire Zoom panel disappears and I can't see your chat anymore. I hope he didn't pass my COVID over. Okay, I'm gonna do a really quick introduction. So while I'm doing the introduction, I won't be able to see your chat because for some reason today, when I pull out the slides, the chat and the entire Zoom panel, I don't know if you guys know what I'm talking about, the Zoom panel just disappears. So that's totally fine. The introduction is going to be really quick and short anyways, right? Okay, let me just share screen. Okay, can everyone see my screen? Everyone can see my screen, right? Hi, yes. Thank you, Jessie. Thank you. Okay, I'm gonna share screen. Everyone can see my screen still? Thank you, Jessie. Okay, I'm gonna start the introduction, really quick one, and then we can jump straight to the chart. So hopefully we can look for more setups today. Okay, hey everyone, welcome to our live trading session. Again, today was supposed to be Desmond. He has COVID. I think he's day 3 with his COVID. So yes, I am taking over. Don't worry. Although Desmond is my mentor, I think I can find equally good trades as well. Okay, good setups. Okay, so let's start with the disclaimer as usual. Disclaimer, you guys already know how this works. Whatever we share with you guys in this webinar should never ever be construed as trading advice. This is not a signals group, it's not a forecasting group. We're basically here to share with you guys how we became profitable in trading by showing you guys and sharing our strategy. Okay, please take this as educational. Okay, trading, especially if you are trading on leverage or margin, carries significant risk and may not be suitable for all investors. Okay, so do be cautious, especially those who are new here. Yes. Okay, so let's do an introduction for those who don't already know me. Right, I'm hoping majority of you know me already. I told you guys yesterday. I do see new people here that weren't here yesterday, like TV 2025. You weren't here yesterday. Hey Patrick, hi Stefani, hi Daniel. Okay, my name is Cassandra. You can call me Cass. I am an investment analyst and a prop trader here at Everest Fortune Group. So a little bit about Everest Fortune Group. We are an award-winning research firm based in Singapore. We're a fintech company. Okay, we are the finalists for 2019, 2020, and 2021 for best equity and best FX research. Okay, so basically when I say research, we do heavily on back testing, on researching, on understanding the characteristics of the charts, particular currency, particular things on the charts. Okay, so we spend a lot of time going back in the past to see how the charts are behaving, so you guys don't have to. Okay, it is very time consuming, I can let you guys know that. Okay, we do a lot of advising to brokerages, banks, hedge funds, and financial institutions on where we think the markets are heading, because a lot of time we do tend to be correct. Yes, so we do a lot of advising on that. So that's that with Everest Fortune Group. A little bit about me in terms of trading, and I think this is important to share so that you guys can trust me, right? Yes, so in terms of trading, I personally passed FTMO twice, and it's not written here, but I've passed my Forex one twice as well. So for those who don't know what these are basically prop trading tests that requires you to be 10% in profit within the month without having a drawdown of 5%. So I've consistently done that month after month after month. I've passed this 4 times already. So I'm as of now, still a profitable trader, yes. So whatever I'm sharing with you guys is basically my strategy on how I became profitable and how I made that 10%. Okay, again, when I was doing this test, because it was to pass a test, I was a little bit more aggressive. My usual is actually about 3 to 10% a month in profit. Okay, usually 10% is because I was like trying my best to pass the test. Okay, I'm also managing 300,000. Actually, it's way more than 300,000 US dollars on my own personal account. Okay, and yes, so whatever I shared you guys, hopefully you gain something out of it and you get to implement it into your own trading style. Okay, our agenda for today, we're gonna go to the live charts, basically look for setups, kind of analyze the charts together. I'm gonna show you how I usually do my analysis on charts. For those who already attended my webinar before and yesterday. Yesterday, not so much. I didn't really talk about my strategy yesterday, but usually if you've attended my webinar before, it is the same strategy. I use one strategy, I stick with it. I'm very religious to this strategy that I use because it is the strategy that has made me quite a bit of profit. Okay, so we're gonna do key approaches we take to trading, cheat sheet checklist, and taking on markets together. Okay, okay. So this is basically the checklist that we use here at Everest Fortune Group to look for our setups. The first is to look for horizontal levels, which is support and resistance, followed by we ask ourselves if there are trend lines, channels, and any other chart patterns, any dead crosses, golden crosses, any natural moving average, stochastics, correlation, reversal, or any breakout. Okay, so this is what we ask ourselves before we look for a trade. Okay, on top of that, we also use a lot of Fibonacci. So for those who don't know what Fibonacci is, I wouldn't be able to explain in detail today because our main focus for today is actually to look for setups, right? So today's webinar will benefit those who already know, will benefit those more for those who already know what Fibonacci is or understand the indicators that we are using, okay? Because if you don't understand, it may be a little bit hard for you to follow today, but that's okay. You can just still stay on the webinar so that you can see the process of us looking for a setup, okay? And then you can learn all these other indicators and all these things on our other webinars. Okay, so we've got the Fibonacci retracement, which is a V pattern, but it is shorter on the other end. We've got a projection, which is kind of like a zigzag pattern. We have got an expansion, which is also a zigzag pattern. I will roughly show you guys later. And we have got an extension, Fibonacci extension, which we use to look for our Nike tick strategy. Nike tick strategy is a strategy that we use here at Everest Fortune Group. It is quite a profitable and probable strategy, okay? And lastly, confluence is when we combine all of it together, all 4 Fibonacci to find take profit, entry, and stop loss, okay? So yes, that's all for our introduction. We are going to move straight. Are you screen sharing as I can't see? I am screen sharing. Can I just check with everyone if it's just T or is it with like everyone can't see. Okay, Kurt can see, Jesse can see, right? I think it's just T, I'm not sure. Okay, Yuha can see as well. T, maybe, I think maybe you can maybe get out of this webinar and then try to come back in again, maybe just restart, and hopefully this time, thank you, Shahida. Hopefully this time it works. Okay, so that's all I have for the introduction. We are going to go straight into the live charts. Okay, just give me a sec to pull out. Okay, everyone can see my charts, right? Everyone can see my charts? Okay, thank you, Jesse. Thank you, T. Okay, cool. I just want to make sure I am sharing the correct screen. I don't know why Zoom is not, the panel just disappeared today. It didn't happen yesterday. I took you guys yesterday. Everything was working great. Okay, we're going to do our analysis now. If you guys have any requests, anything at all, Forex pairs preferably, or maybe cryptocurrency pairs, do drop it in the chat box and we can analyze those charts together. Okay, we have 2 requests already in the same request. Jesse and Kurt. Oh, wait, Jesse is requesting for XAUUSD, Kurt EURGBP. Okay, let's do XAUUSD first. Let's see where it is going. Last I remember it was going down. Okay, so my strategy, can I just find out, can you guys let me know? Okay, thanks Shahida, I will look at GBP USD as well. Can you guys let me know in the chat box just really quickly if you guys are swing traders, day traders, or scalpers, because I need to now decide which time frame we are going to do the analysis on. Usually I do it on the 4 hours and the daily. Okay, usually the 4 hours on the daily, but let's see what the majority of you are, so that we can just welcome, Kurt. Okay, day trader, swing. We've got 1 scalper. Okay, I think majority of you are day traders and swing traders. So I'm just gonna go in between. So when I go in between to cater for both the day traders and the scalpers, I'm gonna do the daily chart and the 4 hours. Okay, if we were catering to just day trading, I will look at 4 hours and the 1 hour. If I was catering to the scalpers, I will look at below the 1 hour. So maybe the 1 hour and the 15 minutes, right? But today I'm trying to meet everyone in the middle. So let's do the daily and the 4 hours. Okay, so I choose 2 time frames to look at. Why? Because I'm always going to the bigger time frames to look for reference. Okay, so what reference am I looking for when I go to the bigger time frame? Ideally, I want to look for trend. The first thing I want to look for is trend. Why? Because looking for trend and identifying whether you are getting in for a buy or a sell, you would have already won half the battle. Okay, if you can identify if this is a buy or a sell, it is already winning half the battle. Okay, so to identify that, we need to know what the trend is. If price is on an uptrend, we are ultimately trying to get in on a buy. If price is on a downtrend, we are ultimately getting in on a sell. Why? Because we want to follow the trend, we want to follow the wave. You can also go against the trend. It doesn't mean you cannot go against trend. You can go against the trend, but we prefer using the trend to push us to our take profit area. Okay, using the trend it's helping you. Okay, so the trend is your friend. So here I don't really see any very clean trend line. Oh, actually I do. There you go. Let me see if I can draw a descending channel. So once, remember that checklist that I pulled out just now, one of the things that the checklist said is there a channel? Is there a trend line? Is there any chart patterns or whatever, right? Okay, so I do see a channel. The first thing you want to highlight is the channel. Okay, I'm going to highlight this channel. Price is moving in this channel. So a valid channel. There are a few of you who are new here. Okay, welcome. Kudos for being here because you are putting in the effort to learn the necessary basics before jumping in, right? Okay, so for a valid channel, you need 2 touches on top at least, minimally. More than 2 is fine. In this case, there is 3 on the top and 2 at the bottom. Okay, there's 3 on top and 2 at the bottom. This makes it a valid channel. Whenever we spot a channel, we kind of expect, right, that price, oops, sorry. We kind of expect price to continue moving within the channel. Okay, this is our bias, the bias that the price is going to continue respecting the channel. Okay, the second thing we do now we have identified our trend. Our trend is a downtrend. We are identifying a downtrend, and we are ultimately more what is the word? More biased or more encouraged to go in for a sell rather than a buy, because we want to follow the waves, right? We want to get to our take profit. Okay, the second thing I want to do after I have found trend is highlight support and resistance. So support resistance, when I mean support resistance, I mean horizontal support resistance. So horizontal support resistance is actually a very, very crucial thing when you are charting, okay? Horizontal support resistance is very important. Why? Because this acts as your entry, your stop loss, and your take profit, okay? Looking for the channel and the trend line is just answering your question, do I get in for a buy or a sell? So you answer your first question. Your second question is, where do I get in for the buy or the sell? Now that I've identified that I want to get in for the sell, where do I get in for the sell? Okay, so you're going to use horizontal levels to look for those levels, your entry, stop loss, and take profit. The easiest way to spot entry, stop loss, and take profit with support resistance is to look for swing highs and swing lows. Okay, so I am just gonna circle this so that those who are new here know what I'm talking about. Why am I circling this? Because on a horizontal level, this is the closest to where current price is. Okay, so I'm gonna highlight that. Okay, this is your first resistance. Why is it resistance? It's supposed to be a support, right? It's supposed to be a support, but because price is cutting through it already, price is cutting through it, so I'm going to consider this a resistance. If price successfully closes below this resistance area, it is a confirmation that this is in fact a resistance. Okay, right now the candle has not closed, so we cannot confirm for sure that this is a resistance. Why did I choose this area? Because, oh, sorry, I shouldn't have chosen this area. I should have chosen it from the wick. Okay, why am I choosing this area? Because when we look at this area, we can see that price came here, reversed, came here a second time, reversed. So price reversing in the exact same area. Will this be available online later? Yes, you can email IronFX. I think if I'm not mistaken, it should go on the YouTube channel if I'm not mistaken, but to double confirm, you can email IronFX to ask them for the recording, right? Okay, so price coming to this exact same area and bouncing off it, what does that tell us? That tells us that this is a significant area that price kind of repels off, right? Price is kind of scared of this area. Every time it gets this area, it kind of bounces off. Okay, but in this case, in recent, where latest price is, okay, price has not closed, okay, so it's not definitely confirmed yet. If price reverses off here a third time, then for sure this is a significant area. If price closes like this, if this candle closes like this, the body closes below this first resistance, it is confirmation that the bearish pressure is so strong at this current point of time that it was able to break this resistance area. Okay, for the new ones, for those who've already heard this analogy that I like to use, you're gonna have to hear it one more time, but this is more for the new people. Okay, so what is price showing us right now? So this is Bob. Okay, Bob is walking to the right. He's walking to the right. Okay. He reaches a door. Okay. He's trying to push this door open. He's pushing this door open. He can't push it because that was the resistance, but a year ago. It's not a problem. No, that's not a problem. Support resistance is always still valid as long as charts is clean, right? Yeah, so Bob is reaching this door. He's trying to push the door. If the door is so heavy and he's unable to push the door, for example, the door is locked, for example, he has no choice but to turn back, right? He has no choice but to turn back. He's like, I can't get into this room. The door is locked, the door is heavy, whatever it is. Okay, so this is what happened in this area here. You can see price coming to the door area or the support area, and it was not able to it was not able to break the support, and therefore it had to reverse. Okay. Okay, that being said, I have to say, even though Bob came here, he pushed the door and he couldn't push it open, it doesn't mean for life and forever, Bob will not be able to push the door open. Okay, maybe when Bob turned back, he's like, okay, I need to go to the gym now. I'm going to go to the gym. I'm going to train my muscles. I'm going to be so strong and I'm going to break the door open. Okay, so he goes to the gym and he comes back. He now has muscles, right? He now has muscles. He pushes the door again for the third time. And because he's so strong, this time he goes to the gym, he manages to break the door open and now he can enter to the next room, okay? So this is exactly what price is doing right now. Price is trying to break the support. It has not successfully done it yet. Why has it not successfully done it? Because the candle needs to close, right? If it wicks like this, you see how this wicks? That's why the candle close and the wick is a big difference. If it wicks, it's telling a different story, right? If it wicks, it's basically saying Bob managed to push the door open, right? He managed to put his hand over into the door, okay? But in the end, he still couldn't push the door open. He had to pull his hand out and the door was still locked, okay? Similarly, price right now is trying to break it. If it manages to break, it is confirmation that price will be going lower. Okay, if it does not break, it means that price will be reversing and heading up. Okay, so right now price is at a very crucial area. This is the area where we look for an entry. Okay, so can you guys let me know in the chat box so I know if you are still following me? Are we more inclined to look for an entry for a buy or a sell in this area here? Okay, we've got answers coming in already. Anyone else? Okay. I see most of you said buy. Jamel or Zahafi is saying that it's waiting. Yes and no in a way, right? It is kind of waiting. I am more inclined to think that I want to get in for a sell. Okay, why? Why? Because we need to see the information that we have collected so far. So the first information we have collected is that price is moving in a channel, right? Is that channel going down or up? The channel is going down. Okay, so because price is going down in a descending channel, I am more inclined to look for a sell entry because I want to ride on prices downwards momentum, right? I want to ride the wave down. Yes, Jesse, you can, there is different ways to play the sell. The one way to play the sell is to wait for the break, right? You can wait for the break here, play a very short sell. The other way you can look for a sell is wait for the pullback and then get in here for the sell, right? So it depends on where you are or what strategy you are playing. Okay, so this strategy that I am talking about is to teach me while talking. Right. Okay, cool, Kurt. At least you're following, right? Okay, so if you were to get in the sell here, you'll be playing this very short move down, okay? Down to where? Down to the next swing low area here, okay? If this successfully closes, it is a sign that there is a chance price is not going to reverse from here. So price is not going to do this. Instead, it is going to do this. More likely, it is going to do this. And then it can pull back to wherever it is it wants to pull back, right? Okay. So why sometimes traders prefer playing the break is because if you play the break, they don't want to miss the opportunity of not getting in for that sell entry. So yes, today's strategy will be looking, not today's strategy, but the strategy for XAU USD is to look for the break. Why? Because price is already on a downtrend, so we're gonna try to ride the momentum. Okay, now that we've highlighted a few levels, I'm gonna go down to the smaller time frame. Okay, I'm gonna go down to the smaller time frame to look for a better entry. Okay. This is why you use bigger and smaller time frames. Just give me a sec. I want to see. Yep, this is nice. Okay. Remember, which time frame would you use as a day trader? As a day trader, I would use the 4 hours or the 1 hour. The 4 hours or the 1 hour. Sometimes if I want to be a little longer, I want my trades to last a little longer, I will look at the daily and the 4 hours. Okay, so daily and the 4 hours, usually the trade can last up to 2 days. Okay, so that's not really day trading anymore, right? But 2 days, I feel like it's still okay. At least I just trade once in every 2 days. That's still okay, right? So it's really what the time frame you choose is based on your personality and your lifestyle. Well, why did I choose day trading? I chose day trading because I am an analyst and I'm a prop trader. It's literally my job to trade, right? So I can look at the charts every day. It's literally my job. But let's say you are an engineer, you're a doctor, you are a business owner, okay? You have other things to do. Maybe you're a student, whatever it is that you are doing, right? And you have other things to do and you cannot come and look at the charts as often as I do because it's literally my job, right? I'm literally in front of the computer every day. I'm literally in front of the charts every day. Okay, then you can choose to not be a day trader. You can choose to be a swing trader. Swing traders are people who hold trades for a very long time. They come and look at the charts once in a while, okay? Okay, cool. Okay, so why I like going down to a small time frame. The smaller time frame can help you look for those confirmation. Remember just now on the daily time frame. On the daily time frame, we are waiting for the candle to close red here to confirm that price has indeed broken this horizontal support area. It has broken this door, right? And it will be going down more, okay? If we go to the 4 hours, you can see that the break and the close already happened, okay? You can see with this second last candle here, price already broken and it closed below the first resistance, confirming that there is a high chance of further bearish movement. Okay, are we all good? Remember, our job as traders is only to collect, especially if you're using technical analysis to trade. Your only job is literally to collect as much information as you can to make an informed decision of where you think the markets are going. So based on the information we have collected, price is going on the descending channel, price has broken a significant area of support. There is no reason for us to think that price is going to go up from here. There is literally nothing that is telling us that price is going to go up at this current point of time, okay? So now that that is done, that means we have found our possible entry area. Okay, we have found our entry area, which is here to here. Let me just draw an arrow so that we kind of know what our trade is for today. Okay, this will be our arrow. The best place to get in for the entry is, of course, the break, the retest. At the retest, you go in for the sell. Okay, that's how I usually get into entry. I patiently wait for the retest. You can also get in at the break if you like to. Why do I get in at the retest? Because I want price to pull back at the best price possible, at a very good price at 1722, then I get in for the sell. Okay, if you get in right now, it's 1714. That is 8 points different. So enter retest on the 4 hours. Yes, you can. Yes, usually I do that. I enter the retest. Could you go through US30? Hey, Stephanie. Hey, Jamal. Okay, so sorry, Stephanie, I just saw your message because we have two chats going on Zoom. Zoom has two chats. One is the Q&A and one is the chat box. Okay, so I'm seeing, I didn't realize you messaged me on the Q&A session. I'm seeing this now. Yes, we can go through US30 in a bit. Okay, so wait for the retest and then get in at the retest on the 4 hours. Okay, that's why you use the smaller time frame. The smaller time frame is to refine your entry. You use the bigger time frame to kind of get some idea of what you want to do. You kind of have a rough idea that you want to get in as a sell, blah blah blah. But when you go into the smaller time frame, it's you're refining your entry, you're refining your stop loss, you're refining your take profit. Okay, so just based on horizontal levels and just based on this descending channel, I am biased of this sell from here to here. Okay, now what we want to do is we want to back that up with other things. What do we want to back this up with? We want to use it Fibonacci levels. Okay, I want to see if there's anything lining up. Just give me a sec. Okay, I want to test the Fibonacci level on the first support area. Why am I testing the first support? I want to see if there is confluence or if there's a lot of Fibonacci levels lining up here. Why? Because if there's a lot of things lining up in a certain area, it just means it's a very significant area and price is attracted to key levels. Price is attracted to key levels and tend to head to those key levels, okay? Okay, so just give me a while to see if there's any Fibonacci levels lining up. They should be the 100%. Not really. It's close, but not. I much prefer if it lines up right on top. Okay, in this case, it didn't. Okay, let me see if I can find anything else lining up here. Nope. It's not lining up very nicely. That's totally fine. Okay, I think this analysis is okay. I much prefer if there were Fibonacci levels lining up at our first resistance and our first support. But in this case, I can't really find any Fibonacci levels lining up there. Why? Because the Fibonacci levels are just confirmation that price is indeed heading there. Okay, it is confirmation that price is indeed heading there. But in this case, it's not. So my confidence of this trade just became like, oh, I'm super confident. This is going to be a sell to okay, I think this is a fairly good trade. It's an okay trade, right? Maybe I feel like there's a 65 to 70% chance of winning. Okay, I much prefer more things lining up here. They will give me more confidence. I'll be like, okay, there's an 80% or 90% chance that I will win this trade. Okay, but in this case, not a lot of things are lining up. I think it's a sell, but how confident am I that it's a sell? It's like, okay, I'm okay with this analysis. Okay, now let's back it up with other things. We want to back it up with indicators. We need indicators to support our argument. More things supporting our argument, the better it is. Okay, it's the same as the dress story I told you guys yesterday. I told you guys you are going to buy a pink dress. You don't know if you should buy it because you don't know if it looks good on you. So you ask your dad. Your dad say it looks good on you. You ask your mom says it looks good on you. You ask your brother says it looks good on you. Everybody says it looks good on you. Obviously, you're going to get that dress, right? Right now, I need all the technical indicators to tell me that, yes, this is a sell. The more technical analysis and indicators telling me this is a sell, the more confident I am that this is a sell, right? The more confident that this dress looks good and I should buy the dress, right? So right now, I think it's a good dress, right? But it's okay. Okay, so Ichimoku Cloud agreeing that this is a sell. Let me get rid of the EMA. Ichimoku Cloud agreeing that it's a sell. So we've got one indicator agreeing that it's a sell. Let me see what RSI is telling us. RSI is telling us that it is a sell. Okay, let me see. Okay, this is tricky. RSI might be suggesting that there is a divergence. Okay, so for those who don't know what a divergence is, it's when the oscillators or the indicators are showing you that price is going on a downtrend, but the indicators are showing you that, oh, this might change to an uptrend might start already. Okay, there might be a possible start of an uptrend. Okay, so there is a divergence here, right? There's a divergence in this area. Can you guys see it? For those who know what divergence are, you guys will probably see it as well. For those who are new here, I would not be able to teach you divergence today. It is a topic on its own, another divergence. Okay, that is another divergence. And another divergence. Okay, all the oscillators are showing divergence. My confidence of this trade has just become 55%. I think it's a sell. I still think it's a sell, but I'm now only 55% confident to sell. Okay, so if you want to get into this trade, just take note that there are 3 indicators already telling you otherwise. Okay, do you see here? Price is going down, but on the indicators, it's showing you that price is going up. So the indicators are trying to warn you or signal you that, hey, the downwards momentum might have already ended already, or is going to end soon. Okay, that is the whole point of divergences. I have a love-hate relationship with divergences. I hate seeing divergences, but when I see it, it is a sign to me that, okay, I should stay out. So the indicators show that we should look for a bounce back to the first resistance. The thing is, the only place I will get in for the buy now is the first support, right? If anything, I would think the bounce will only happen at the first support. Why? Because all these things here are still telling me it's a sell. Okay, so I don't think just out of nowhere price will just suddenly reverse out of nowhere for no reason, right? So there might be a chance that it might want to go down a little bit first, and then the buy should happen at the first resistance. We should only consider entries at key levels. So from here, from the first resistance to the first support, this area from 1722 to 1680, I don't see any other key level. So I cannot see any other entry for the buy along the way. I cannot pinpoint the exact entry. Okay, so how I got my 10% trades, how I'm profitable every month is because I'm able to use technical analysis to pinpoint exactly where I think the entries are. And it's always key levels. Key levels are always your possible entry, stop loss, and take profit. In this case, the only key levels I see is this first resistance area and this first support. So the only thing I will consider is selling from the first resistance to the first support and buying from the first support to the first resistance. Other than that, I don't see any other possible trades with XAUUSD. Okay, let's not waste too much time. I'm going to move on to the next chart. I'm not going to spend so much time on the next charts. Okay, we're going to quickly do this. We've got 4 more requests: EU, RGBP, by Kurt, GBP USD by Shahida, and Stefani is requesting for US30. Okay, so let's just quickly do this analysis. Okay, I'm gonna leave the indicators here because I'm going fast now. Okay, daily, want to find some information from daily. Actually, sorry, I should remove everything so that the new people here won't get confused. Okay, first thing I see, ascending channel, price is an ascending channel area. Second thing I see, possible channel actually. Let me see if I can draw a channel. Yep, that's a valid channel, all right. Okay. The thing I see, there was a descending trend line here. Okay, there was a descending trend line here. That price broke, came back and didn't retest. Okay, why am I highlighting this descending trend line that happened a while ago? Because there is a strategy called the trend line breakout pullback, where price breaks out of the trend line, comes back to retest at the trend line, and then bounces to the area it broke out to. But in this case, it didn't. It didn't bounce from the breakout area. It continued to break back in. Okay, so this descending trend line is not relevant to us. Do not use information that's not relevant. Okay, information that's not relevant will you're gonna get bad analysis from that. Okay, let's highlight some support and resistance. If I don't see a probable trade on a particular chart, I'm going to move on to the next chart. Okay, why? Because you can chart, you can do your analysis, but sometimes there are just no probable trades. Probable means it's a high confident and high chance of winning trade. Okay, we want to find high probable trades. Means you have a high chance of making money out of it. If you don't have a high chance of making money out of it, honestly, it's the same as going to the casino. Going to the casino, playing blackjack, you have a 50% chance of winning. But with trading, with technical analysis, you get to choose high probability, 80% chance of winning, 90% chance of winning, only you get it. Okay, I think I'm a bit more biased for a buy because of this ascending channel, right? The entry that I would have used was here, okay, but it already happened. Price literally came here and bounced off the exact area. See, using horizontal support and resistance, you would have able, let's say this doesn't happen already. Okay, let's replay. Price was here. Let's say price was here, for example. Okay, using technical analysis, you would have already been able to pinpoint that price would have bounced from here. You would have been able to see that this was the entry, this was the buy entry. Why? Because we have a horizontal area here lining up exactly with the channel. Okay, and on top of that, I'm sure if I pull out Fibonacci, I'll be able to find Fibonacci levels lining up there. Let's see, it would have been probably the 78.6, no, 61.8. Okay, no. It would definitely be more reason to pinpoint exactly why price is going to reverse off there. $1.2. Okay, there's a 127.2 lining up there. Okay, so there's already reason, and true enough, it does reverse off there. So this trade for this already happened. This one already happened. We should move on. Okay, I am very sure it's going to come up to this area. This is going to be the take profit area because that's a key level. Price is attracted to key levels. And now this is the area we can consider getting in for a sell or a buy. Okay. Number one thing you should take note of is that price is at a horizontal level. Okay. It's at a door right now. Will it be able to push the door open? If it will, it means it's going to continue moving up, means you get in for a buy. If it doesn't push the door open, means it's going to reverse and then you get in for a sell. I don't want to get in for a sell. Why? Because if it get into a sell, I wouldn't know where to get out. Okay, I wouldn't know where to get out. I can get out here at the first support, but that doesn't make sense. I can get out here at the support area, but it doesn't make sense. Why? Because the support area is outside of your channel. It needs to break this channel before it can even reach your take profit, right? And that is unlikely, right? So we want to find analysis that are probable and chances of it happening is likely. So I'm more inclined to want to look for buy. If it doesn't break, that's fine. I'll just take it that this trade did not work out. I missed this trade. I'll just take it that move on. I'll go to the next trade. So price is approaching here. If it breaks here, my open supplement is now not looking. If you don't mind me asking, where did you get in for the sell? And if you have a stop loss, it's okay to be wrong. If you have a stop loss, it's totally fine, right? Because then you won't lose your account. You're using proper risk management. Okay, when price gets here, if it breaks this area, or much higher rather, if it breaks and go above this area, I think that is a very high chance. It needs to break, okay? Not wick. It needs to break. High chance it will go to this next area. So it's going to be a very, very short and small move from here to here. Okay. Stop loss, where do you put it? You can put it right under it. Okay. My strategy, I like to play very tight stop loss strategy, but you guys need to take note that putting a very tight stop loss means that there is a chance you get wicked out prematurely. Okay, give me a sec. Long position. Okay, if you get in here, if this trade plays out nicely, if it works out nicely, you will be doing a 1 to 2.68 risk to reward. That means if you have $100,000 account, you're risking $1,000 because I always advise that you only risk 1% per trade. Every trade you get in, you risk 1%. That's why I'm never scared when I lose, right? When I lose, I'm just like, okay, that's 1% of my account. That's totally fine. It's only 1%. I need to lose 100 times before I lose all my money. If you lose 100 times, it just means you're a really bad trader, right? So if you have $100,000 account, you're risking 1% to make 2.68%. That means $1,000 for $2,680. Okay, I think this is an okay risk to reward. This is a good risk to reward. Okay, my open sell position is 84198, 841. Oh wow, that is very low. Okay, that's very low. Stop loss 84972. 84972. Okay, good stop loss placement. Very good stop loss placement. Okay, that is a very good stop loss placement. If price breaks here, it just means it's going to go up. Okay, I'm here to learn. It's from a copy channel. Okay, no wonder the stop loss placement is very on point. If it breaks this area, it just means the sell is no longer happening anymore. If it does not break, it means that you still have a chance for the sell. Okay, the person who asks you to get in for that sell, asks you to get in here, it means that the person was hoping that price breaks this channel. That is a very bold move, I think. The is expecting price to break this channel. I don't think it's impossible, but I personally would never call for a break of a channel unless I think there's a lot of things telling me that it's going to be a break. Most of the time, I think price do respect stuff. So for your sake, I hope it breaks the channel, right? For your sake, I hope it breaks the channel. Okay, I'm new, but when I looked at it, I thought, will help rule out. Yeah, I'm glad you're here, Kurt. Learning, this is important. Okay, let's move on to the next. I have 12 more minutes with you. I will be probably able to go through the last two, which is GBP USD, requested by Shahida, and US30 from Stefani. Okay, GBP. Don't worry, we've all been there. We've all been new traders before. When I just started trading, I lost quite a big sum myself, right? Very big sum actually. I also went on signal groups. I also went on wherever I went, a lot of things. But I tell you, the best thing you can do for yourself is to learn how to properly trade. After losing so much, giving my money to people to trade for me, blah, 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 I decided, okay, enough is enough. I need to learn this skill for myself. And then that's when everything changed. I made back everything I lost and much, much, much more. I can say trading has changed my life, right? So it can do for you as well. You just need to actually put in the time to learn it. The hardest part about trading is learning how to trade. Other than that, it's not really that hard, okay? Learning how to trade is the hard part. It is so time consuming. There is so many things to learn, right? But I can tell you it is a very good skill and it's worth it. Okay. Trying my best to make this channel work. Why? Because I need to narrow down where I think price is going. Okay, it doesn't seem like this channel wants to work. Yeah. No, definitely it's a good time. Okay, so I cannot really draw a channel. It doesn't matter. I'll just draw a descending trend line then. The descending trend line fits. I much prefer channels, because channels narrow down where exactly price is going to move within. Okay, descending channel is just a confirmation that price is going down. That's totally fine. Okay, let's see what the 4 hours is saying. Let us just highlight a bit of this is not a descending channel, but this is a wedge. Okay, so for those who don't know what a wedge is, a wedge kind of looks like this. Kind of looks like this. It looks like a triangle almost, a descending triangle, okay? Because I couldn't draw a channel. I couldn't draw a parallel channel, that's fine. I just need to narrow down the price movement, right? I just need to narrow down where I think price is going. In fact, there's an even smaller wedge here so that we can continue to narrow down where price is going. Okay, I'm gonna get rid of this bigger descending trend line because it's too far away from current price. Therefore, it is irrelevant to us. Okay, it is irrelevant to us, especially the day traders here. Okay, I'm more inclined to believe that this is a sell because of the bearish momentum. Okay, so the thing about wedges, there are rules about wedges. Wedges works in this way. It kind of looks like a triangle, right? Okay, price is moving within this triangle looking thing. When it reaches the end of the triangle, it will decide whether it wants to go up or down. If it wants to go down, it will break. Okay, probably retest, get in at the retest for the sell. If it wants to go up, it will break upwards, wait for the retest, get in for the buy at the retest area. Okay, so there's two possibilities here. Why am I more inclined to think that it is a sell? Because of the current downwards momentum, right? We all see this like lower highs, lower lows. Okay, so there is existing bearish pressure at this current point of time. So it makes me a bit more biased that price is going to go down. To find the sell TP, yes, I would need. Good question, Kurt. Kurt asking, would you need to extend the chart out to find the sell TP? That is exactly what I would have to do. In this case, no matter how much I zoom out, I can't really see anything. That's totally fine. Let's go back to the bigger time frame to find something. Okay. Even on the bigger time frame, it's really far away. On the bigger time frame, the take profit is here. Yeah, not very interested in this trade. Not very interested in this trade. Why? Because I am a day trader and a scalper. Okay, for price to reach here, you would probably need to hold your trade for a while, probably weeks. It looks like it will take, okay, let's say I take this ruler from here to here, from here to here. is, okay, they're expecting 20 bars. 20 bars. It will take 20 days for price to reach your take profit area. I can't do that because I'm a prop trader. I need to make profit every day, right? So I'm not inclined to do this. This is more from the swing traders here, right? For the swing traders here, you can consider getting in for this. If it breaks, you can consider getting in for this sell. If it breaks, let me try to find you a closer take profit. Okay, so when you cannot find a take profit entry and stop loss using horizontal levels, you can use it using Fibonacci confluence levels. Okay, so Fibonacci confluence levels, interesting. We just missed a very good trade. Okay, remember I was telling you guys in the beginning of our webinar, we like to use a Nike tick strategy. Nike tick strategy is literally Nike, you know, the shoes, Nike tick, like Nike, right? So there's a Nike here. Usually when price comes to the 127.2 level, we expect price to bounce from here back, completing that Nike tick move, and then we would have made our profit. Okay, so we just missed that Nike tick trade. It's totally fine. Let me see what I can find from here. What other trade I can find from here? Give me a sec, guys. Okay, nice. There is confluence. Confluence, do you see this area? 161.8 Fibonacci extension and the 127.2 Fibonacci projection is lining up in the exact same area. Okay. Let me see if I can find, okay. Negative 61.8 Fibonacci extension lining up in the exact same area. Okay, what can I tell you? This is a very strong key level. There's a chance price might get here. There's a very, if this is in fact a sell, this will be the take profit. Okay, if price breaks this wedge, okay, this will be your take profit area. You have 3 Fibonacci levels lining up in the exact same like number or area. Okay, it's not even a zone, it's not even spread out, it's the exact same. Okay, so when we're going back to that Bob story, it's basically Bob. Okay, he reaches the door, he pushes it open. Okay, support and resistance represents your door. Fibonacci levels represents barriers behind your door. So it can be a 10 kilo rock. Okay, it can be a 10 kilo dumbbell that is behind the door. So we can see here, right, that there's 3 Fibonacci levels lining up in the exact same area. So we can say that this exact same area, they are like 3 10 kilos dumbbells, or 3 10 kilos rock, or like a sack of, I don't know, bricks or whatever, lining up at the same area. So even though there's no door there, by the time Bob gets there, he will see like there's so many barriers, there's so much resistance in his pathway, and he's like, I can't get to the other side. I'm just gonna turn back. Okay, so there's a chance price will get here. There's a chance price will be attracted to this area. This is the key level area. Again, price tends to want to keep trying key levels. Okay, it is attracted to key levels. Think of it as a magnet. Okay, this is a magnet attracting price to come to this area. Okay, but first, before it can come to this area, it needs to be able to see this area. How? By breaking this area. Okay, if price breaks this 127.2 area, which lines up with our, sorry, I'm going to change this to first support. If price breaks the first support, there's a high chance it will go to the second support. I'm going to get rid of this. That's very far away. We are not even going to use that because we are mostly day traders here. Price might eventually get there, right? But that's for the swing traders. Okay. Okay. Price successfully breaks this wedge, this 127.2 Fibonacci level, and this first support, you are good for a sell. Let me see what the indicators are saying. We need the indicators to agree with us. Indicators agree with us, we are good. Okay. Ichimoku Cloud agreeing with us. Ichimoku Cloud saying that this is in fact a sell. How do you use Ichimoku Cloud? If price is moving below the cloud, it is sell. Okay, it is bearish. If the blue line is below the red line, it is bearish. In this case, the blue line and the red line have just merged, means that there is a little bit of confusion. Why is there confusion? Because price is reaching the end of the wedge, okay? So price doesn't know if it's gonna break lower or if it's gonna go higher because it's reaching a door. Every time price reaches a door, the question is am I able to break the door and move on to the next room, or is the door very heavy and I have to turn back? Okay, so price is reaching a key level. If it breaks, it's going to go to its next key level, which is the second support. Okay, Fibonacci is agreeing. Let's see if other indicators are agreeing. I think it's a very highly likely sell, to be honest. If this breaks, I myself will be getting in on this sell. It's not like gold, you know, with gold, I feel like, it was an okay analysis. This one seems like a high probability trade. Okay. Let me see. Okay, yes. So the thing about MACD, it's showing that bearishness is decreasing. You see all these red bars. The red bar is signifying bearishness, right? If we look closely, we just zoom in, you can see that the red bars are getting shorter and shorter over time, right? It is not, it means that the bearish pressure, the people who are selling are getting lesser and lesser, or the bearish pressure is getting weaker and weaker. Okay, that being said, it is also good because the bullish pressure is also equally weakening. Okay, it's also weakening, which is also good. Okay, so right now it's just confusion area. The break of this area will confirm the sell. Okay, that's all I have for GBP/USD. Oh my goodness, we have run out of time. Okay, let me just quickly do US30 because the final request of prayer, I did promise that we will be looking at US30. Let me just do a really quick analysis. Okay, immediately the first thing I see, we cannot use Ichimoku because price is moving sideways. Ichimoku Cloud does not work on sideways market, so this indicator will not be useful to us. It will not be giving us accurate information. Do not use indicators that are not giving you accurate information. Okay, because you're gonna collect data that is incorrect and you're gonna be losing. Okay, let me see what the other indicators are saying. MACD is confused. Don't use the MACD. Stochastics. Possible bound. Just give me a second, guys. Let me quickly do an analysis on this. I think it's going to be a sell. Bearishness on the daily. Very bearish on the daily. There's a descending channel. Okay, there's a descending channel here. Price is bearish. Price is in the middle of nowhere. Okay, I do think it's a sell. Where do you sell this to? This is just a very quick and vague analysis, okay? So here, if this candle closes red below this, it is your first sign that is a possibility for a sell. That is a confirmed breakout, okay? It might be a fake out. Hopefully it's not a fake out. Fake out means that it breaks and then it cheats you and it comes back. Okay, let me see. It needs to break this low as well. It needs to break this low to confirm. Okay, price needs to break this first support area, then it will go to the second support area. Okay, this is just based on a very, 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 very vague analysis. I have not combined it with anything else. Let's see what Fibonacci is saying. It's probably going to be the 61.8 or the 78.2. Okay, it is the 61.8. Okay, price needs to successfully break this first support area to confirm the sell. Okay, why do I think it's a sell? Because of the current bearish momentum. Price is moving in a descending channel. Okay, on top of that, it is okay. It's moving in the descending channel, which is showing bearishness. That's not a good enough reason. Why? Because the descending channel is so wide. You see how it's so wide. This small little move here is not relevant to how wide this channel is. Okay, so let me try to find some indicators. Okay, only thing I can say about this is don't get into this trade. Why do we not get into this trade? Because why do we not get into this trade? Okay, because I think it's a sell based on analysis. I think it's a sell, right? But it doesn't look like the indicators are agreeing with me. I don't have indicators that are supporting my argument. Although I do think it's a sell, just if I totally block out the indicators, right? If I'm not using indicators, whenever I use indicators, indicators work as a confirmation for me, okay? Indicators work as a confirmation for me. Right now, the confirmations are not agreeing with myself, or rather, it's just not supporting my argument. So although I think it's a sell, I think maybe there's a 60% chance I might get this right, okay? Maybe a very low, I think it's a medium. My confidence level is a bit like medium for this, okay? It's not like a trade that I'm like, okay, all the stars are aligning. I'm so confident. I have a very good feeling for this. I'm gonna sell my house. I'm gonna sell my kids. I'm gonna go all in on this. Okay, kidding. Don't ever do that, okay? Don't ever do that. But yes, my point is, although I do think to sell, I just can't seem to find enough evidence that it's a sell. RSI is agreeing with me. Other than RSI, no other indicators agree with me. Okay, so if you do want to get in on this, there's a chance that it might reach the take profit. It's just that, yeah, not very, it's not a high confident trade, okay? That's all I have for you guys for today. What period settings do you use for RSI and MACD? Hey, Najmo, I just use the default settings. So for RSI, if your default settings is not 21 or 14, you can just change that to 21 or 14. It doesn't matter. 21 or 14 will work good. Stochastics, I use 21, 5, and 3. And MACD, I just use the default settings. I've never changed the settings for MACD before. Okay, let me just pull the MACD out. The default settings for MACD is 12, 26, and 9. Okay, I hope that helps. I will catch you guys again probably next week. Thanks for attending, guys. Bye. Thanks, Ellen. Thanks, Hassan. Thanks, Hans. Thanks, another Hassan. Thanks, Ismail. Thanks, Jamel. Thanks, Jerry, Chris, Jesse, Juha, Mustafa, Muti, Najmo, Andrej, Patrick, Shahida, Simon, Stefani, Joe, Ash, Annie, Tuan, Tan, William. So okay, this is a long list. Okay, bye everyone. Thanks for attending. I'll catch you guys again very soon. Bye guys. Enjoy the rest of your day.